with the area of accounting and financial management. Today we are going to talk about the company accounts, so let's talk about it further. This particular chapter relates to the area of module B. Here comes the first question. What is the purpose of the financial income statements? To show the company assets and liabilities. Then the second point is to report the company's cash flows. Then to measure the company's profitability over the specific period, and to provide details about the company investments. When we talk about the income statement talks about the profit and loss of an organization. It talks about nothing else. Income statement is basically a statement which is meant to show the profit or loss of an organization, right? So in this case it helps in measuring the profitability. So to measure the company's profitability over a specific period. Which type of shares are typically entitled to fixed rate of dividend irrespective of the company's profits? Equity shares, preference shares, cumulative preference shares, or bonus shares. Which type of shares are typically entitled to a fixed rate of dividend? See, equity shares are the residual shareholders. They get whatever is left over in the organization. They do not get any other sort of money at all. So equity shareholders are those shareholders who have got the money there, right? Then we have preference shares. When we talk about preference shareholders are those people who get a preference at the time of liquidation and at the time of liquidation number 1. And okay, one is liquidation. Second point would be related to the area of at the time of dividend distribution. At the time of dividend distribution, they will come first and take the money. At the same time, when it is about liquidation, at the time of liquidation, that means the company is ending. At that point of time, even he gets more money. Okay. Then we have cumulative preference shares. Cumulative preference shares means which is accumulated. Okay. So when we talk about accumulated means, this means if in case the company is supposed to pay dividend in the first year, dividend in the second year, dividend in the third year. They paid the dividend for the first year, they paid the dividend for the second year. In the third year, they faced a loss. Then in the fourth year, when they will pay dividend, they will pay dividend for D3 and D4. That is why it's called cumulative. Cumulative means to collect. This means the preference shares are collectively given the dividend later on. If we cannot give it right now, we will give it later on. Bonus shares are free shares. So the answer is preference shares. Okay? These are those people who have a fixed rate of dividend. Whatever happens, they normally get a fixed rate of dividend while equity gets the leftover. But always remember, even though equity are the scavengers of the organization, they get the leftover. Equity shareholders have the voting rights, because ultimately these people are the owners of the organization. They have invested for a longer period of time in the organization. Their investment is way more than anybody else in the organization, right? Now, what is the primary purpose of share capital account in the company books? What is the primary purpose of share capital? To track the market price of the shares, to record the purchase and sale of shares, to track the nominal value of shares, or to record the company's expenses. What is the primary purpose of share account? When we talk about the primary purpose of share capital account, when we talk about the share capital amount, we are trying to note down what is the book value of the organization, right? before we actually find out the true value of the organization outside, we need to know what is the true value of this organization inside. That is, we need to know the book value of the shares. है ना? What is the net worth as per our assets and as per our liabilities and as per the organization's performance, that is their profit and loss. So in this case the correct answer would be nominal value. That is, it is helpful in finding out the book value. Oh, just give me a moment. What is the accounting treatment for forfeiture of shares? What do you mean by forfeiture, everyone? Forfeiture means the person was supposed to pay. Right? What is the accounting treatment for the forfeiture of shares? The share capital is reduced, the share capital remains unchanged, the share capital is increased, the share capital is transferred to the reserves. What is the accounting treatment for forfeiture of share? Forfeiture means we ask the particular person to pay, but he said, I don't have the money, I cannot pay you, I'm sorry, or he's not responding at all, and ultimately we decide to scrape off his share. That means we decide to write off his part of share. So it would be the share capital is reduced, the share capital remains unchanged, the share capital is increased. In this case, the share capital is reduced because we thought we are having 10 lakh rupees of shares, but among them there are some defaulters. Maybe they are the defaulter of around 30,000 rupees. So this would reduce your amount to 9,70,000 as the share capital. Okay? Then what happens when a company issues shares at a price lower than the face value? It is known as rights issue. The excess of recorded as a capital reserve. The excess is credited to the profit and loss account, or it is not allowed under the company law. What is the what happens to the company when issues price is lower than the face value? This is not good. Normally the companies should not be issuing share at the price which is lower than the face value, right? It is a right issue. It is basically excess recorded in capital reserve. Overall, this is not allowed. The shares cannot be issued at discount. Earlier they could be, but now that is not allowed. Okay. So basically what happens when the company issues shares at a price lower than the face value? When we do that, normally it is not allowed. So as per the Income Tax Act, it is clearly said that you cannot issue shares at a discount until or unless it is related to ESOPs, employee stock option plan. Okay, there is employee stock option plan. Under employee stock option plan, you are not allowed. You can issue shares to your employees at a lower price. Which of the following is not a type of preference shares? Cumulative preference shares, non-cumulative, redeemable, and equity. Which of the following is not a type of preference shares? Which is not a type of preference share? Preference share, cumulative preference shares means, as I told you, if I fail to pay the dividend for the first year, then in the next year I'll pay for D1 plus D2. That is cumulative. Non-cumulative means it doesn't get collected. If 1 year there's a loss, then in the next year you will get dividend only for that particular year. Redeemable preference shares, which is paid off. And in our country only this kind of thing is allowed, because after 20 years you must pay to them. And then we have equity preference shares. What do you mean by equity preference shares, everyone? There's nothing called equity preference shares, because preference shares are different from that of equity. Which type of share does not have a special right or privilege? Equity, preference, cumulative and redeemable. Preference shares have got a lot of privileges. There's only one kind of share which has got nothing. They just live on leftovers. That is equity share. But how harsh it sounds, huh? That equity shareholder lives on leftovers. So does it really happen that way? Overall it doesn't, because when the company makes surplus profit, then what will happen? Who will have that particular charge? It will always be of the equity shareholder. Nobody else is going to have it. Now if the company earns this much chunk, they will face it. If they earn this much chunk, then they'll have to face it. So ultimately this is what happens, you know. Done. So equity shareholders do not have any kind of privilege. They live on leftovers, so they are living on that particular part itself. Done, everyone? If a share of rupees 10 on which rupees 8 has been paid up is forfeited, it can be reissued at minimum price of rupees 10, rupees 8, rupees 5, rupees 2. If the share of rupees 10 on which 8 has been paid up is forfeited, it is forfeited, it can be reissued at a minimum price. See, the point is, the person was supposed to pay 10 rupees and he paid 8. After paying 8, he said, I cannot pay you further. If I want to issue, it should not be less than 10 rupees, because I told you the share cannot be issued at a price less than its face value. So technically I need to have this 8 plus 2, 10 rupees, minimum 2 rupees and maximum whatever I would like to charge. Because 8 is already received on the share, I can charge just the last 2 rupees and I'll be done with the entire face value. So in this case the answer is 2 rupees. Always remember, the shares cannot be issued at less than the face value of the shares. Okay? It cannot be less than that. It's a rule. Next question. If the vendors are issued fully paid up shares of 1 lakh in consideration of net assets of 1 lakh 20, the balance of 20,000 will be credited to goodwill account, capital reserve, then we have vendor or the P&L. If vendors are fully issued fully paid up share of 1 lakh, and consideration of the assets, I bought some assets, the assets are worth rupees 1 lakh 20. If the vendors are issued fully paid up share of 1 lakh, so 2 share capital, they are issued fully paid up share of rupees 1 lakh. So what about the remaining amount? This will turn out to be either security premium or capital reserve. So in this case it would be capital reserve. Okay? It can be the security premium or it can be capital reserve. Done? Which of the following should be deducted from the called up capital to find out the paid up capital? calls in advance, calls in arrears, share forfeiture or discount on issue of shares. Which of the following should be deducted from the capital? Acha, everyone. What should be deducted? The amount which other people are not paying, hai na? Only that amount has to be the one which is going to create a chaos. It is calls in advance, calls in arrears, share forfeiture or discount on issue of shares. It would be calls in arrears. When we write our share capital, when we write our authorize is the one for which we have taken permission. Authorize, then we have subscribe, the one which people take up. Then we call them for money, that is called up. Then we have after called up we have paid up. From called up we remove the calls in arrears. So in this case, since the remaining is not paid, so we'll have to find out the value na. So this is the one. So in this case we have to remove the calls in arrears first. Normally, but in practical life there is no more share forfeiture. Earlier it was. In today's world there is no share forfeiture. Next question. Next question says A Limited purchased a machinery for 1,80,000 for which it is paying by issue of shares ₹100 each at a premium of 20%. How many shares will be issued as consideration? 2,500, 2,000, 1,500 or 3,000? A Limited purchased a machinery of 1,80,000 for which it is paying ₹100 each at a premium of 20%. So basically it's gonna be a 1,80,000. The purchase consideration, the formula is PC divided by face value plus the security premium. If there is no security premium, then we will not record it. It's gonna be 1,80,000 divided by 120. So it's gonna be 1,500. Okay? The answer is 1,500. There are 1,500 shares, everyone. This is the formula for this particular portion. Whenever we have to calculate the portion there, it is going to be the purchase consideration divided by face value plus the security premium. So this is it for the day, everyone, and happy Janmashtami. Due to the eve of Janmashtami, or we can say that due to the birth of Lord Kanha or Lord Kanhaiya, Krishna, whatever there are so many names, hai na? So when we talk about this particular eve of Janmashtami, we are providing you certain discounts, and let's talk about that on our regarding our courses there. So let's go ahead and check it out. You need to go on to our website, that is www.adda247 if you're looking forward towards your JIB preparation, right? You have to go on to the area of JIB and CIB. Here you will find JIB and CIB Mahapack. Right now Mahapacks are the best point because under Mahapack you get everything. Our normal classes, our detailed classes, our revision batch, our previous batch recorded which is already done, marathons, mega marathons, paid class, even the area of live classes. You are getting e-books, you are getting the area of unit testing, you are getting the area of marathons and mini marathons, plus you will also get the mock test paper. So we are introducing so many things for you, so why not to utilize this particular opportunity, hai na? So what you can do is you can check out our JIB CIB Mahapack, which is a combination of both, and you can use the code KANHA80, right? That is KANHA80, and you can get it at 11,577. Both JIB and CIB. This also includes the CIB elective paper as well. For elective paper, you don't have to go through the hush and rush ki acha what should I do, which should I buy. You don't have to worry about that. You just have to buy one particular course and you will be sorted. ठीक है ना? Done, everyone? So if you're looking forward to it, then kindly check it out on our website and our app for further details. For JIB and CIB Kamaha pack, don't forget to use the code KANHA80. And if you want to buy only JIB Maha pack, that is also available for you. You can buy it for 6719.20. If you'll buy it for 6 months, you'll get a particular double validity of 6 months again. So you've got 600 hours of live classes, 298 test series. A good number of test series are available, everyone. Plus we have got 273 ebooks along with 637 videos. So if you're looking forward to it, then kindly check it out on our website and our app.